Uber, because it is up double digits today after posting strong revenue numbers and giving updated guidance that topped expectations. CEO Dara Khosrowshahi joining Squawk Box this morning and said despite recession worries, customers are still spending.
The consumer, and especially the U.S. consumer, remains strong, and they're spending, and they're moving a bunch of their spending from essentially retail to services. And we are in the service sector, right? If you're going out to restaurants, cities are opening up, you're taking Ubers, and Uber Eats growth continues at a strong pace as well.
Joining us, Steve Jang from Kindred Ventures, early investor and advisor in Uber. He is still invested in the stock. Steve, when you are super early. When did you get into Uber?
I was an angel investor when the company first started in 2010.
And so clearly you've done very well and you're sticking with it. It does feel like a new sort of era. Obviously, since the company IPO'd, Dara Khosrowshahi has been focused on profitability, but now it feels like they're really serious. They generated $358 million in free cash flow. Adjusted earnings was its strongest that it has been. How would you describe where Uber is on that journey?
I mean, this has been a long journey, well over 12 years now since the company was first founded in 2009. Even then, at earliest stages and even up until last quarter, naysayers were saying, hey, you can't grow an on-demand sharing economy marketplace like this and also be profitable. It's basically a statement that's been blanketed across every company, including Airbnb, DoorDash, you name it. I think what Uber has proven now with 2 straight quarters of growth in EBITDA and free cash flow is that you can achieve growth and profitability. You can create a mobility and logistics network that's increasingly profitable. This feels really, really good to a lot of the early employees and investors that had to weather a lot of that naysaying. Today, Uber has over 120 million active customers. It's done about 2 billion trips in this last quarter. And it has done net revenue, not GMV, net revenue of $8.3 billion. That's growing 73% year over year. The ride-sharing business is profitable. It's proven profitable. And I want to say that again, it's proven profitable. And this is a big deal. This is a good sign for a lot of the other companies in the space, for a lot of the other marketplaces. I mean, today, Uber from a marketplace perspective is the 3rd largest marketplace behind Amazon and Shopify, if you look at just pure GMV. The ride-sharing business alone is almost $1 billion in EBITDA this last quarter. So I think there's a lot of craft around the story of Uber, the narrative of Uber, but the original platform that Garrett and Travis built has proven true. The concept of building this network into a profitable state, growing globally, has been proven true now as of this quarter.
Does that change if we continue to see regulatory crackdown on the gig economy workers, as the Biden administration Labor Department has just put out in a proposal?
Absolutely. I mean, a misguided approach from the U.S. government would be to hammer down on a global income platform that has generated almost $11 billion in earnings for its contract workers and drivers for part-time work. And this is global. This is 25% higher than last year. And if you were to take a policy that would basically be a dull hammer and hammer down based upon an edge case within the labor driver pool in Uber and other companies like that, that would be a mistake. What we're creating out of the U.S. is the largest global mobility and logistics network. This is an incredible thing that the U.S. has been responsible for, and it would be just a shame to do that. But this is a critical thing, and this will be adjudicated not by a single agency, but actually by Congress, I believe.
So, I mean, lots more on Uber, but while we have you, Steve, since you got in here in 2010, believing in the model and the profitability potential, what is the next Uber that you're excited about? You guys are in all sorts of consumer tech. Some of them have done well. Some of them, Coinbase in the public market, not as hot. What's the next one?
Well, what's interesting right now is on the Web3 front, you see some of the efforts by Facebook and Meta, now named Meta, in the metaverse, and that's caused some rancor for them in the public markets. But I think that's generally directionally right for Zuckerberg to focus in on that area. Now, that's a 5 to 10 year story arc. Coinbase as well is on a 5 to 10 year story arc. Right now, all risk assets are down: equities, crypto, NFTs. But Coinbase is so well positioned in that area. Their trading volumes are starting to come up. They've consolidated a lot of their products. They've shipped a lot of products over the years, and they've consolidated them over the last 6 months. I think they're well positioned when basically equities, crypto, and NFTs and the Web3 world rise back up. And so I'm very bullish on Coinbase's opportunities in the future.